Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Good morning traders, how are you on this wonderful morning? I say it's a wonderful morning because we had such a good trading day yesterday, guys, and we'll have a look at how good yesterday was. Today is Wednesday the 27th of July, and as always we will look back at yesterday's trades, Tuesday's trades, we'll look at today's potential trades, and we'll take a look at the important news for today. So let's start. Let's look back at yesterday, which was a stupendous day. We had three potential trades that we were looking at, and all of them pretty much went in the direction that we expected. All right. So the first one was this. This was the euro against the pound, and we were looking to short this pair. So the reasons for shorting this pair were as follows. So we was clearly in an uptrend. Okay. Bouncing off of this grey diagonal line. Okay, yeah, just kept using that as support. All right, so we was in an upward channel, an upward trend, and then bam, it broke out of there. Okay, so we were clearly in a downtrend after that, and then it come all the way back up to here, and then we're just looking for another entry candle to, you know, take price back down. All right, and it was this candle here, okay, that gave me the confidence to take this pair lower. Let's zoom in so you can actually see what's going on rather than use a magnifying glass to see that. Okay, so yeah, we had this one here. It started here with this wick, okay, but then this candle here, the one in the square, it closed. Yeah, it closed out of this range. It was in a slight range just for a few days. But then this candle broke that range. It was a bearish candle. We're in a downtrend. And we just wanted to go from our grey zone down to the last lows here, guys, really. And that's exactly what happened. Wonderful. Okay, but let's see if we can actually get in on this trade. Okay, see if our criteria was met. And it was, thank God, because it was such a good trade to get in on. So if you remember, guys, we only had the one grey zone, okay, and then price. So yeah, price had a lot of overnight, didn't know what to do with itself, and then it did come back up, test our grey zone. Okay, this candle and this candle do not tell me that sellers have taken control. Yeah, that's what we need to see, guys. In this grey zone, we need to see a candle that tells me sellers have taken control. Okay, so that doesn't tell me this. It isn't until, let me try and zoom in a little bit, this candle. Okay, so this candle tells me sellers have taken control. Remember what I look for, guys, when I'm looking for a candle to trade from, our entry candle. So obviously it's a very bearish candle, but it's also bigger than the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's bigger than the last 14, 15 candles, okay? And also, it breaks this low here. So it breaks the H1 low, tells me H1 structure is still coming down. Bearish candle from our grey zone, okay? So I entered on this candle, guys. I was very excited about entering on this candle. But I have to put my stop a few pips, yeah, usually about 5 pips, depending on the pair, above the swing high on the H1. So my stop was here, I entered here, and I closed 100% of my trade, yeah, at this blue line. Okay, so I got a risk to reward of roughly 1:1. Yeah, I closed 100% of my trade here. In hindsight, which is a beautiful thing, we don't have hindsight in trading, but in hindsight, yeah, I would have obviously left some money on the trade to run. Okay, and it came down nicely. Okay, so yeah, guys, great trade. I assume you got on the same candle. Yeah, let me know how you traded this, but for me, great profitable trade. Happy trader. Next trade from yesterday was this. This was the euro against the Japanese yen, and we were looking to short this pair. Okay, so price was in an uptrend, higher highs, higher lows, didn't create a higher high, higher lows, didn't create a higher high. So this always tells us that price could be breaking down if it's not making new highs on an uptrend. Okay, and then sure enough, price breaks down, breaking these lows here. Okay, and what I'm going to do, I'm going to extend these lows across the chart, because as you can see, they come back into play over here. So price came down. Okay, I was just looking for the right candle to enter, take this shorter. Okay, and then as you can see, we had these couple of candles bounce off of this area of resistance. It was once support over here, and now when it hits here, it becomes resistance. Okay, it's a common pattern in the market, guys. I love this pattern. Okay, and then what we were trying to do, guys, we had this candle and this candle, but admittedly the day before it was a green candle, but because of the previous red candle, sellers were still in control. Okay, so I was just trying to come off one of the grey zones and then take it back down to this last low. Sorry, this psychological level, which is exactly what happened again, guys. All right, but let's have a look to see if we can get in on this trade. So day chart direction, all wonderful. But let's look on the H1, guys, and see if our criteria was met. So remember, we had a couple of possibilities with this pair. So price could come up to here, form a bearish candlestick pattern, and we could take it lower, but it didn't quite reach this grey zone. The other idea was that it breaks this grey zone, which it did, but I needed a retrace. I needed it to come back into this grey zone before I could take it lower. Okay, so for me, it was off to the races too quick. Okay, I wouldn't enter on this candle, because that is directly entering into the last H1 low, and price could quite easily bounce off of that level. Okay, so then we had this candle, which tells me we're off to the downside. We've broken these last H1 lows, but if I enter this, I would either need a huge retrace up to here or something, which we don't get, because I need to put my stop. I mean, there's a couple of places I could put my stop. I could put it above the grey zone, okay, because I would expect price to react at this grey zone and come down, okay, or an extra conservative stop would be above the last swing high, okay. So this could be a stop, this could be a stop, all right, but again, we didn't really get a retrace, guys. And this candle here, although it definitely tells me sellers are in control and price comes down, I just don't get the risk to reward. If I entered on this close of this candle, so we don't get a retrace, put my stop here or here, I'm still not getting the right risk to reward. So for me, guys, although it was the direction was great and it hit our higher time frame target, I couldn't get in on this pair because the risk to reward didn't make sense. But again, guys, let me know how you traded this. Maybe you traded it slightly different. Please let us know. Leave a comment. So yeah, no trade there, guys. The third trade idea from yesterday was this. This was the US dollar against the Swiss franc, okay? And we were shorting this pair, okay? So price had come down off this range, come back up, okay? And then I was willing to take price lower, okay? Because let me show you on the weekly chart. So yeah, this is in a range, okay? It's coming from here to here. Yeah, price was just ranging, okay? But then I was happy to take a short halfway up this range, because let me show you on the weekly chart. So yeah, because of this zone, because of this zone, yeah. So this high and this huge wick, yeah, this becomes an area of resistance for this pair. Sure enough, we get this negative candle appear at that zone, okay? And price has come down ever since. So this weekly chart was the reason I was happy to take shorts, yeah, halfway up this range. Yeah, it sort of started here, guys, yeah, this area here. And then we had this bearish candle form a couple of days ago, and this green candle, similar to the euro yen, but this red candle here still tells me sellers are in control, and this green candle, buyers have not taken control back. Okay, so sellers are still in control, and the idea was just to take it back down to these lows. Okay, that didn't quite happen, but we did get a bounce off of our grey zone. So let's look on the H1 to see if we actually had a trade. And we did. It was, yeah, let me explain. Okay, so by the time we were looking at trades, yeah, it was around here. Okay, but let me zoom in a little bit more. But these two candlesticks, yeah, sellers are not in control. Look at these wicks. Wick, wick. Sellers are definitely not in control. Okay, do not enter on that sort of candle. If you do, there'll be big punishment. I'm only joking. There is no punishment. Okay, well, there will be punishment. You'll get stopped out. Okay, and then we had this candle and this candle. But again, look at this wick. Okay, and then this is just a doji. Lots of indecision. Do not enter on these types of candle. No, no, no. Okay, so these were not entry candles. The first entry candle was this, guys. Yeah, it had a huge wick to the upside, which is good. We like this, which means the price is being pushed down. And on the body, there was no bottom wick. Okay, and it dwarfed this wick, this candle before it. Okay, so this was the first candle we could enter on, but we had to get a retrace, because realistically, guys, you need to put your stop up here. Okay, so again, I consider myself a little bit fortunate. I got a retrace and I basically entered here. Okay, all right, so I literally entered to a pip or two, yeah, before the price started coming back down again on the next candle. Okay, and then so this becomes my risk, so I need at least the same reward. Okay, and I literally got out at these lows here. Okay, so these last lows here, when this was hit, I closed 80% of my trade. All right, guys, so yeah, that's the candle I entered on. Had to get a retrace, stopped up here, and then took price here. All right, so I got a risk to reward of 1:1. Sorry, closed 80%, and I'm still in this trade for 20%. So let's see if it comes back down today. My stop will still be above this high here. All right, guys, so yeah, good trade, and still in this trade on the US dollar Swiss franc. Again, leave a comment. Let me know how you traded this pair. Right, guys, that's the recap from yesterday. Let's take a look at today's potential trades now. Guys, another wonderfully profitable day yesterday, yeah? You could see the trades we took from the recap. I hope you took some of them trades too. Yeah, really good day. If you enjoyed that recap, guys, then please subscribe to the channel, smash that notification button, and you'll receive this video every morning like magic. Also, guys, please subscribe. Please like the channel. Yeah, help support the channel. It's much appreciated, guys. Right, enough of that. Let's look at the trades for today, Wednesday, the 27th of July. So we've got 3 potential trades, guys. The first one is this. This is the euro against the US dollar. And if you remember yesterday, guys, I was talking about euro weakness. It feels weak. Okay, so yeah, it definitely was weak yesterday, and let's see if it continues more today. Okay, so we are shorting this pair. Remember, the day chart is your reason why. Why am I shorting? Well, let me show you. So price is clearly in a downtrend. Lower lows, lower highs, lower lows, and these are the potential lower highs. Okay, you do not have to be Bill Gates to see that is in a downtrend. Okay, and then if I zoom in, guys, so you can see it's a bit clearer, yeah, then we've got this candle form yesterday on the day chart. Very bearish candle, bouncing off of this moving average 20 that you can see. And also what I like about it is before this candle formed, there seemed to be a lot of indecision here. Okay, and then bang, we have a large negative candle. Yeah, broke the lows of all of these last candles. Okay, and is also bigger than all of these candles. Okay, so yeah, like this candle. So all we want to do, guys, is come from one of these grey zones and take it back down to this psychological level at 10050. All right, guys, so yeah, that's the why we are shorting it. Let's look at H1, because this is always our criteria, what we need to happen to enter the trade. Very important. So we've got two potential grey zones here, guys. All right. This is the first potential grey zone. Price is already retraced into it. But now we need to see in this grey zone a bearish candlestick pattern form. Okay, once we see that, we can enter the trade. We can take price back down to this last H1 low. That's always our first target. Close 80% of the trade and then leave 20% to run. Okay, if you don't quite get a risk to reward of 1:1 to this last H1 low, then you can leave it to run a little bit before you close the trade for 1:1. Okay. If that doesn't happen, guys, price could retrace up to this grey zone, yeah, which corresponds with these last lows over here. Again, we want to see a bearish candlestick pattern form. We enter the trade. We take price back down to the last H1 lows, which will be here. Close 80% and then leave 20% to run to our higher time frame target. Okay, guys, so that's the first trade idea, Euro US dollar short. Second trade idea is this. This is the Canadian dollar against the Swiss franc. Okay, we don't have a lot of room with this trade, but there's still enough profit to be had. So price was clearly in a downtrend. Let's start the story up here. Remember, day chart is your reason why I'm shorting or longing. So lower lows, lower highs, lower low. Price didn't know what to do with itself. Then it broke out of these highs here. Okay, so then for me, it was then in an uptrend. It came back down. It tested these, what was once resistance is now support. Tested it, bounced back up. Okay, didn't create a higher high, and instead come back down and broke these lows. Okay, so it's been quite a tricky market, but for me, we are now in a downtrend because we have lower lows. Okay, so let's just zoom in a little bit. Okay, so these were the last lows. Okay, and now we've had a lower low. Okay, so structure is in a downtrend. All right, and we got this very bearish candle formed yesterday. So from this bearish candle, I just think we can take price back down to this last low here. That's all we're aiming for. Okay, but that's still a good 35, 40 pips as we currently stand. All right, so, you know, enough profit to be had. Okay, guys, so that's the why we're shorting this market. Let's look at H1 to see our criteria, what we need to see happen. So, guys, we've got a couple of grey zones. So price again has already retraced into this grey zone, but we haven't yet seen a bearish candlestick pattern form. Yeah, we need to see that form, then we can enter the trade. Again, our first target are these last H1 lows. If we get a risk to reward of 1:1, if we don't, perhaps just let some of the trade run, 100% of it. Okay, close 80% there and then leave 20% to run. Okay, that doesn't happen, guys. Price could retrace up into this grey zone, and again, corresponds with these lows over here. We want to see a bearish candlestick pattern form, enter the trade, take price back down to this last H1 low here, close 80% and then leave 20% to run. Okay, so Canadian dollar, Swiss franc, we're looking to short this pair. Okay, third and final pair is this. This is the euro against the Swiss franc. So we're seeing a bit of Swiss franc strength here. With this pair, guys, yeah, it's clearly in a downtrend, but it is a little bit oversold, okay, but it's not a million miles away from the moving average 20. So I am willing to short this. Okay, so why? All right, so these are the reasons. So it's clearly in a downtrend, lower lows, lower highs, lower lows, lower highs. Yeah, and it's coming down even lower. And we had this very bearish candle form. Okay. Again, like I said, it is a little bit overbought, but it's not a million miles away from the moving average 20. Okay, so it gives me a little bit of encouragement to take this pair as well. And all we want to do, guys, is see a retrace, and then we can take it back down to this psychological level of 9,700. Okay, guys, so we're looking to short this pair. That's the reasons why. Let's look on the H1 to see what criteria we need. So, a tricky chart, guys, because the only grey zone I can really see was when these last lows here were hit. Okay, so this grey zone corresponds, yeah, with these lows over here. Okay, so price in an ideal world will come up to this grey zone, react, you know, aggressively in the form of a bearish candlestick pattern. We enter the trade and we can take price back down to these last lows, close 80% and then leave 20% to run. Okay. Also, guys, because that daily candle is so bearish, yeah, then price, we could go, if we want to be more aggressive, we could trade on the first bearish candlestick pattern. Let's say price just comes up to here, yeah, and then we see a bearish candlestick pattern form. Then if we're feeling a bit more aggressive, we could enter on that. But again, enter the trade, close 80% here, leave 20% to run. Okay, guys, so euro, Swiss franc short as well. We're seeing a bit of Swiss franc strength there. So, guys, they're the three trade ideas for today. Let's take a look at the crazy world of news. Guys, if you're enjoying this daily morning analysis and want to receive it every single morning, then please subscribe to the channel and smash that notification button. Come join us at Simply Forex. Right, news for Wednesday, the 27th of July. So overnight, we had a big piece of data coming out of the Aussie dollar. Okay, and this was CPI because inflation is so important at the moment, and that was worse than expected, guys. So yeah, that would have moved the Aussie dollar, I'm sure. Okay, but that's been and gone. All right, so the first piece of news that we're interested in today is this. At 1:30 London GMT, coming out of the US, we've got core durable goods orders. Okay, so this could really move any US dollar pair. Okay, we carry on down. The next piece of important news is at 3 o'clock, again coming out of the US, and it's pending home sales. Okay, 30 minutes later at 3:30, again coming out of the US, we've got crude oil inventories. So this will affect the US dollar and the Canadian dollar because they're closely correlated. And then, to be honest with you guys, what the market is really waiting for is this. Yeah, at 7 o'clock, we've got the Fed interest rate decision and statement. Okay, so they're expecting another 0.75 rate increase, okay, up to 2.5%. So this is really going to move all of the pairs, not just US dollar pairs. It's going to send the whole Forex market into a slightly crazy frenzy, most likely. Okay, so think about, do I want to be in a trade when this is released? Okay, so yeah, that's coming out at 7 o'clock. And then just as volatile, half an hour later is the press conference. Okay, and this, what is being said in there and why they arrived at the decision, the interest rate decision, this again really makes the markets crazy volatile. Okay, so yeah, to be honest with you guys, the whole world will be waiting for this news this evening. All right, guys. So yes, that is the video for today. I hope you've enjoyed it. If you have, please subscribe, like, and share. I hope you have a great trading day, guys, and I'll see you tomorrow.